Let's start with that volatility. We just heard some fairly relaxed views from guests there about volatility and how far through it we are. You fear, though, that this could be a bit of a theme? I mean, it can be in August.
I share the relaxed view overall. I do think elevated volatility is a theme for August. Seasonally, it tends to be higher volatility. Partially it's just because it's holidays in most of the northern hemisphere. And it's just, it's when there's sporting events, people are off, people kind of, just park on the trades and leave them alone till September. Now that they've been stopped out, they're going to be less inclined to get excited about opportunities in August. And they're going to wait a few weeks. So I do think we're going to see higher volatility. I agree with one of the guests there that one of those quotes, I don't expect the volatility to reach the extremes of Monday. So I think it's going to be a higher level of volatility than we've had most of this year, but that doesn't necessarily mean as high as we've had over the last week. I overall share the kind of view that I'm not expecting a sudden hard landing in the US, and I think that the downturn that we can expect to see over the coming weeks does provide opportunities for potentially stocks or assets to do better into year end. But I do expect more losses in the weeks ahead. Not necessarily dramatically so like Monday, but some sort of negative trading over the next coming weeks.
Mark, morning. Why did the 10-year auction in the States go so badly yesterday, and will the 30-year today follow suit?
It's a good question. I think the 30-year probably won't do as badly, but it probably will do not great. I think what happened is that yields just rallied way too far too fast. And the only way you can justify the level of rate cuts priced in the US, not just the US, actually most of the way around the world, but particularly in the US, is if the US is suddenly going into a hard landing. And if it's suddenly going into a hard landing, a sudden going into a recession, well, people get a bit worried about what they're going to do on the fiscal side as well. So it's not particularly great for the long end, even if long end yields come lower initially. So I think that the bias for yields over the coming weeks is to go higher amid volatility, two-way volatility, but overall to go higher from here unless we have a really shock either in markets or the economy. And I think that's the backdrop for why the auction did badly. And as I said, we're also going into election later this year, which is going to encourage bear steepening of the curve, because both parties don't care about the fiscal side.
Are we done with selling Japanese stocks, Mark? We saw a big drop from July highs, of course. We've kind of reclaimed around a third of that. What's your expectation?
We're not done with selling Japanese stocks. I think they're going to underperform from here. I think the story is over. It's been broken by a central bank misstep. The BOJ has killed animal spirits just when they're going to escape decades of stagnation. The economy is pretty stagnant this year. It's barely growing. It's one of the slowest growing economies in the world. And now you've got a central bank that normally disappoints and confuses. Well, last week they did not disappoint. I can't claim that this time around, but they're still confusing. And that does not encourage investment in an economy that desperately needs encouragement because there lacks animal spirits and there's a lack of natural growth, and therefore Japanese stocks will remain underperformers.